At first glance, this picture is a nice, wonderful holiday winter day with snow on the branches and the trees, the side of the road. But when you look closer, that road has that snow on it, which means it could be slush or even ice. And it's windy, so that could be pretty dangerous. And that's the way the markets have been the last couple of weeks. Very dangerous. So let's take a look. We're going to look at two charts today, beginning with the CBOE volatility S&P 500 index, the old fear factor, or the VIX, VIX. And we closed this Friday at 28.34. I'm going on a weekly basis back 5 years using the weekly, even though I told you that we have shifted into the monthly. It's only barely. And I think that there's plenty we can learn still from the weekly. So I'm going to stay with the weekly, going back 5 years to give you some context to what we saw back in 2015, 2016. So we spiked above 35 at that level there, but earlier in 2018 we were above 50. And this was here in early 2016, which was above 30, and then the prior spike to that in late 2015 was well above 50 there. I'm looking at these two time frames simply because I find a lot of similarities. And I think that what we learned here in 2015, 2016 is going to apply here. So we had this higher spike here. Now this did go a little bit higher than I expected, but I think we're going to probably calm down. We have one more trading day left in 2018. So I think that the volatility is going to start calming down in 2019. I talked last week about that pension buying, and I think that did come in. But again, that's just a rumor. There's not going to be any proof of that, at least now. Perhaps maybe in a few months or so, we might hear something about it. But it's a rumor. But given how much volatility we had, that 1,000 point rise earlier was perhaps a sign that some big buying did come in, but we can't prove it. And here we are to the MACD. We are at a level that is exceeding any of these prior points that we've seen. So I think we're going to see a mixed bag in some of these oscillators where some of the levels are higher, but some of the levels are lower. And let's go to a lower one right here in the histogram. Probably consistent with the spike we had a few weeks ago, but certainly lower than early 2018 and then lower than late 2015, but slightly higher than early 2016. So a mixed bag there. Price rate of change, we're in the higher elevations at this point here, not quite as high as here, maybe somewhat consistent with what we had there. So I think we're scoring these levels here, and I think these levels stay above in these upper areas only for a short period of time. So I think that things should be calming down into the relative strength. We're really not all that high, 66 there, and we've been higher many, many, many times, and it has only been higher for a short period of time, and then things calm down. So I think we're going to be calming down. The stochastic has a pretty interesting run up to this level here, kind of a run up we don't really see in the past 5 years or so, but we do have this level here, which is somewhat consistent with that, a little bit higher than some of these other levels, but I think that that's going to turn tail here pretty soon. Same sort of thing in the Williams, a pretty good run up here. So what that tells me is that run up, we do have a possibility that we have another spike that might go higher simply because it had this nice little ski jump. We don't see that back in any of the other time frames here, but this is only 5 years. So what I'm seeing is the possibility there, but I just don't see the probability. In my opinion, with how little we have left in 2018, I think things are going to calm down into the new year. So that's my expectation. That's what I believe the probabilities are. So let's go to our next chart, which is the SPY. So now we're taking a look at the SPY, the 5-year weekly. And again, I'm staying with the weekly. I think it gives us good context. Now, the contradiction that I see between, say, the indices and the VIX is this sell-off here, such as in the SPY, all the way down to that level there. In comparison, the sell-off here in early 2018, as well as in 2016 and 2015, when you take a look at the various oscillators of the VIX, this sell-off is way out of proportion. So I think it's overdone. Moving here into the MAC, there is quite a difference between the fast line and the slow line. We'll get back to that here in a second. But looking at the histogram, way down here, things were improving, but then all of a sudden the floor fell out. Same thing in the price rate of change with the possibility of a bottom attempt there. Same thing in the RSI as well as in the stochastic, maybe an attempt here. What I don't see is a lot of volume. I would have expected a lot more volume to go with this sell-off, and it's not there. Could the volume come in the near future? Yes, but with 2018 winding down, I don't think it's going to come. I don't see that as the probability. The probability I see is that things are going to start to repair in 2019 and we'll have a rebound. Now back up here to the Mac, you can see that there's a big difference between the fast line and the slow line. And when there's such a difference, before the fast line is able to bottom, head up, and cross through the slow line, there can be a lot of volatility. And that's proven by the last couple of weeks. So that's the risk that I see, but there are opportunities out there in the market. We'll talk about that a little bit more in the next video, perhaps coming out tomorrow or so. But for now, be patient. I think that there are some opportunities out there. Look for those opportunities and maybe deploy some of that dry powder. Get some deep discounts here into early 2019. But again, don't be in a hurry. There's no need. You're going to make money if you get these things at a discount, even if you don't get them at the absolute bottom. So for today, that's ChewDog Charts. Thank you.